So what did equity markets do in the first few quarters of 2012? All right. In quarter one, the equity markets went up, off to the races. In quarter two, we had our summer sell-off, kind of the sell in May, go away adage, if you will, where people just took their summer breaks. There wasn't much going on. The markets dipped about 8 or 10%. And then in quarter three and into quarter four, we rallied really, really hard in the equity markets. That's what the equity markets did last year. In response, or alongside, forex markets in the first few quarters of 2012, as equity markets went up in quarter one, the U.S. dollar saw weakness. As equity markets went sideways and sold off during the summer, quarter two and the beginning of quarter three, we saw USD strength. That was the flight to quality. Equity markets down, the U.S. dollar was the flight to quality and went up. And then as equity markets recover and went up quarter three and quarter four, the U.S. dollar went back down. All right? So equity markets and the U.S. dollar had an opposite relationship. Now, equity and forex markets in 2013. In quarter one, just like in quarter one in 2012, in quarter one in 2013, the equity markets have been very, 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 very strong. All right? What, in turn, have the forex markets been doing? There has been, in some cases now, not an opposite reaction. Not equity markets up, U.S. dollar down. Equity markets went up, and the U.S. dollar has actually also strengthened, so I want to show you that. But my question for you is, now we're starting to enter mid-April. We're only about 6 weeks away from summer break, kids going on vacation, and we're really only a few weeks away from May, and that's sell in May and go away. So if the equity markets went down in summer of 2012, like they did in summer of 2011, summer of 2010, and the summer of 2009, what are we going to see in the summer of 2013? Are we going to see the same thing? A very, very, very strong quarter one in equity markets. Can they keep that going all of quarter two and quarter three, or are we going to see that same pattern? And if so, the real question is, what do FX markets do? What does the U.S. dollar do? What do your pairs do based on what they're doing right now? So before I switch the application here, someone just asked a question. What percentages do you give to fundamental trading and what to technical trading? Very, very good question. I am a technical trader first and foremost. But equity markets, and remember you guys, I'm not just a forex trader. I trade equities, I trade options, I trade relationships, I trade short-term, I trade long-term. I use these relationships to help me because remember, I'm also looking at a portfolio of equities, and I'm looking to protect those if I think that they're overvalued, and I use options to protect them, and I use forex to protect them because maybe there's a relationship between a gold position and a forex position, as far as the Australian dollar and the U.S. dollar, or a big oil position or natural gas, and then the Canadian dollar as we look at those commodity currencies. So keep in mind that when I'm talking, I am kind of focusing on all of this, and it's something that I bring into my own trading. It's something that I bring into my discussion when I'm working with traders one-on-one as I help them as part of my consulting. So remember, on one part, I do work with managers who manage money and developing models for them to make sure that we're trying to reduce risk properly, but then I also work consulting with individual traders who want to manage or co-manage their portfolio and obviously be a trader and manage their investments. So right now, to answer the question, a lot more is going towards the fundamentals because that's what's driving it. Technically, it's hard when we're at all-time highs in the stock market to say there's a technical level here we're going to sell off. Right now in the S&P 500, which I'll show you, the equity markets, it's going to all-time highs. There's not much levels you can use because there are no more technical levels when things go to all-time highs. So you got to be very careful there, but you also have to make sure that you're aware of that economic calendar and the fundamentals because that's what's driving the markets right now. It's definitely a fundamentally driven market. I'm aware of that first. Then if I go trade, I do go use my technicals, but I'm still in the background very, 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 very aware of fundamental events that have happened to cause movements and that could happen coming up, on the calendar. So right now I'm weighing things definitely more heavily on the fundamental side. So good question. All right. So before we get into the last screen here today, we're going to jump now into the market. So let me go ahead and switch the applications here. And first, what I want to do is I just want to go into these charts. This is an equity chart. Remember, I use different brokers because I'm trading different time frames, trading different products, so I'm not recommending any brokers, even though you might see the name up here. But I want to pull up the S&P 500. And I'll pull it up on a long term just so you guys can see, because maybe some of you aren't aware of what's been going on. And let me pull this up on a weekly. All right. So what you're seeing here is we were in the S&P 500, the broad equity market index in the U.S. We were up here in 2001 before that crash happened, and then we were up here in 2007 before the Great Contraction, and now we're higher than those levels, basically. We're right at those levels or higher than those levels. So all-time highs here. So technically, it's very hard to use a technical pattern. Let me bring this down to just the year-to-date. So I'll bring it up for a 6-month chart, just so you can see here's January 2013, and you can see what the equity markets have done this year. So to the moon for the U.S. equity markets, all right, to the moon. Now what I'm going to do is I'm going to share one more chart before we leave here, volatility. I touch on this a lot, volatility, all right. What has volatility done year to date? It's declined and declined and declined and declined and declined, sideways to down, but overall it's declined. If I bring up a longer term chart, as equity markets go up, even though there's uncertainty in Korea, even though there's uncertainty in the Middle East, even though there's uncertainty about the U.S. economy, and let alone other economies around the world like the European economy, overall the equity markets have gone up and volatility has gone down. What does that mean for your trading ranges? Do you guys notice trading ranges being bigger in forex or smaller in forex? Hopefully you're saying smaller, because they definitely are smaller in forex as volatility goes down. So let's leave here, now that you know what equity markets are doing long term and short term, let's leave this and move into the forex markets. So again, I'll bring up another platform here, and again, no recommendations. So let me show you what's been happening this year, even though equity markets have been going up, and last year when equity markets went up, US dollar went down. What is the US dollar doing against the pound since January? Right here in January, beginning of the year, we were at 1.61. We went all the way down to 1.48. So the Great British Pound lost 13, 14, 15 pennies against the United States dollar. What did the euro do against the currency, against the US dollar? It went up a little bit, and then overall it's much lower. So it went down. What did the Australian dollar do against the currency, the US dollar, as equity markets went to the moon in the first quarter? All right. It dropped a little bit, and now it's rallying very, very hard. So again, why is we're seeing some currencies where the US dollar is going with the equity markets, some we're seeing it go opposite. So there's not one pattern that's relating, to all the US dollar against all the currencies. It's a macro thing. What is going on in the Australian dollar current economy against the US economy? Because there doesn't seem to be a relationship right now between gold prices, which are going down, Australian dollar going up, equity markets going up. So is there something in the Australian economy that they're doing as far as their interest rates versus the U.S. interest rates? So they're going to highs. They're having very bullish days as of late. What fundamentally is causing that? So that's where your fundamental versus technical, that's probably a fundamental event to get it to move that much. New Zealand dollar, I want to pull this up for you so you can see. Look at it on a daily chart, okay? January sideways, February a little bit down, March, April up. Not only is it up, though, here at these levels on this chart at all-time highs on this chart that we're seeing this time frame, but weekly, look at it. It's close to pretty much major all-time highs against the U.S. dollar, all right? So I'll go back to weekly. So right up there, 88.5, and we're at 85. We're only about 3 pennies away from there. And look at this range. If I draw this horizontal trend line right here, a lot of resistance right around here, and we just busted through it. All right. So what's next? Maybe these highs up there. So something to be aware of in the New Zealand dollar. If they continue to have bullish events for their dollar, meaning are they raising interest rates again? If that happens and they continue to do that, could that get it to strengthen against the U.S. dollar? All right. So far we have 2 currencies over in the European region that are weak against the U.S. dollar when equity markets are going up, and then we have 2 currencies over in the Asia Pacific region, if you will, that are strong against the U.S. dollar. Now I'll bring up the Canadian dollar, all right? Definitely against the U.S. dollar. Oil prices declined a bit, and then they came back up. So since January, let me bring this up so you can see it. So since January, U.S. dollar strengthened, and then gave back a little bit of ground. This is something nice that you can always put a Fibonacci level on here. We can do it from this move right here, and it's retraced about 30% of the way. Maybe there's some support coming in. But overall, over the first quarter, the U.S. dollar strengthened against the Canadian dollar.